answer. Okay, we'll go ahead and get started. Again, we're going to be talking about the SPY Super System software. My name is Dave Wise, and live here in South Carolina, Charleston, South Carolina. Work from my home, of course, and I've been doing this full time for about 15.5 years now, trading. Okay, so we're going to talk about the trading room, the text alerts, talk about Heiken Ashi candles. We're going to cover a lot of things. I try to, obviously, these webinars are meant to introduce you to the room and the alert service as well as the software, but I try to put in a lot of educational information for traders as well. I find that it's when I used to listen to webinars when I first started, I kind of like to pick up on information that I thought would help me in my day-to-day trading, even if I didn't happen to purchase what they were selling. So that's what we try to do here. Okay, so we'll get going. Again, we have to do the usual disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. That's very important. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. One thing about not trading with more money than you can afford to lose, this last 2 or 3 weeks, 3 weeks especially, has been extremely volatile in the market. If you follow the market, you know that the tariffs on, tariffs off, tariffs on, tariffs off, all of that talk just caused absolute chaos in the market. The Dow was fluctuating back and forth thousands of points a day. 2 days it was down 3,900 points. The next day it was up 3,200 points. This kind of trading volatility is what takes traders out. And I know a lot of retail traders who had been trading for quite a while were trying to trade through that crap. And as they always did, and it cleaned them out. Basically, they get margin calls, their accounts got blown up, and they stopped trading. And we did very well during the time. We didn't take very many trades, which is the key. Okay, so let's move ahead here. If you have any questions during the webinar that I can't answer, just put your name and number in the chat box or the question box or your Skype username. And if there's anything I can't answer, Rory from Right Line will get back to you and answer any questions you might have that I can't answer. Okay, and there's this number there that you can call if you need to. I'll put this up again at the end of the webinar. I might have to mute my sound time as I cough. All right, sorry about that. A little bit of allergies and tickles in my throat, so not good for doing webinars. All right, so this kind of is a graphic depiction of the SPY Super System. I'm going to show it in much more detail, but this is just what it looks like. It runs on the SPY Super System software, runs on Thinkorswim. I run it on Thinkorswim. It also runs on Ninja, but I use it on Thinkorswim. You don't have to trade on Thinkorswim. I don't trade on Thinkorswim. I trade on Tradier, but this is where I get my indicators from in my trade setups. Okay, so it's called the SPY Super System. You see it in a minute. I also have an alert service. We call it the Compass Alert Service. Excuse me just a second. I have a cough again. Apologize for the interruptions, but allergies are bad. Okay, so we do have a text alert service where we, for anybody who's not in the room or can't watch all day long, we send out alerts. I'm on the alert service so I can judge how long it takes to get them. I get them in about 7 or 8 seconds from the time I actually put the trade on the alert and send it out. Okay, one thing I want to talk about, and I talk about this in every webinar right up front first, is it's important to understand what drives a market. When a market is chopping around and there is no trend to it, usually what's happening is mostly retail traders are trading. So this kind of represents myself and all the other retail traders in the world, millions of us. And when we're in the market without any kind of institutional force, and I mean institutional force in one direction or the other. Institutions can be in there trading one way and another institution another way, in the third institution neutral. You can get a lot of that. That's not going to really impact the market. But when the institutions don't have a direction defined to what they're doing, and we're in there as retail traders, all we're creating is chop and chaos. It's just very difficult to trade, and it's best for us to stay out of these trades when the market's doing this. Now, when the institutions are in any kind of force, pushing the market one way or the other, or index one way or the other, this is when we want to be in. And so this is when what we want to be able to identify, which is what the SPY super system does. We want to identify as closely as we can when institutions are pushing a trade and when they're not. Okay, so that's critical. Now, what are the institutions? Well, probably most everybody knows that they're made up of investment banks, Goldman Sachs, Morgan Stanley. There's many of these things, obviously. JP Morgan, and just several big investment banks. They have billions and billions and billions of dollars to trade and to invest. And they typically have a trade desk where they have humans making trades. Very small portion of their business is done through humans. Most of it is all done through algos. Algos, they have many different algos that look for specific condition setups, news. They actually scan news for to trade, and they fire off these trades in milliseconds. And so that's the biggest portion of the institutions, are a big portion. But they're also made up of hedge funds. There's hundreds of hedge funds, again, with more billions of dollars to trade. Then you have pension funds, police pension funds, firemen pension funds, state worker pension funds. These are huge institutions that also become part of the institutional ball right here. And the last one would be things like T. Rowe Price and Vanguard, your mutual funds. They also do a lot of trading, and they have billions and billions of dollars. That's what makes up the institutions. This is what moves the market. When they're in a concerted direction, when there's more of them going long than going short, when you have a huge disparity there, then the market's going to move. It's going to trend. And our job as retail traders is only to be trading when the institutions are driving a trend, and be out of it when they're not driving a trend. All right, so that's what we do. Okay, so we move forward here with a question here. Okay, Michael, I see that. Rory will get back to you on that. All right, so in the room and on the alert service, I have a couple of rules that we trade by. One is we trade the best and skip the rest. This sounds really easy. It's not. We have to try to find the very best trades, but this is really important to trade only high probability trade setups. Now we skip the rest. This is probably even more important, because what this does is keeps us out of trades that are not high probability trades, and it keeps our trade count really low. Now this is hard for most retail traders to do, and the reason this is very difficult for retail traders to do is because they get bored when they're sitting there and they haven't been trading for a couple hours, and they get bored and they start to take trades. So they're now not trading the best. They're just finding a trade to take, and they can justify it in a lot of different ways. But they know that it doesn't meet their criteria because they're just basically going on their gut, and they're trading out of boredom. So the last thing is here. The other rule is our objective is not to make trades. Our objective is to make money, and we do that by only taking the very best trade. So keep this in mind when you're trading. Many times not trading is the best trade. Cash is a position, and it's very important. In this market recently, a number of trades I've taken this month is extremely low compared to any other month, because you can't take swing trades right now. There's too many gaps. It's very unlikely to be able to make money in these things. So what's the best thing to do? Sit on your hands. Stay out of them. We do day trades, and we do quite a few day trades, intraday trades, but very few swing trades. Okay, and maintaining discipline and learning to follow the process. And maintaining discipline means understanding and having a grasp on what strategies work. You know, all the strategies we use, I have tested them over many years. They all have at least an 80 to 85% win rate, if not higher. And our discipline is to only take those kind of trades. And it depends on what the market conditions are. And we learn and follow the process. This is important. The process is using your criteria. Excuse me again. Sorry about that. I'm hoping my allergy medication will kick in. But this is important, maintaining discipline, which means stick with the strategies that we know work and stick to them when the market tells you to. Don't be trying to trade any time that the criteria is set up. You've got to depend on the market. The market tells you whether you want to trade or not trade. And that means learn and follow the process. The process is the criteria to find a high probability trade. Second thing is to remain patient. And again, I keep coming back to this, is try to keep traders from trading when they shouldn't be trading, which is when you've got a bunch of retail traders in there chopping the market around. There's no direction to the market, and you don't want to be in there. You want to be, because listen, we trade based on probability. And if you've got a 50-50 chance of probability of the stock going in your favor or going against you, you don't want to be in those. You want to be in when you've got a 75, 80, 85, 90% chance that the stock is going to go in your favor. So that's why being patient is very critical. Now, as profitable retail traders, we need an edge over other retail traders. Because we're trading against other retail traders, make sure you understand we're not going to take money from institutions. We're going to take money from other retail traders. So the edges we have is we use our SPY Super System software to identify when institutions are in the trade. We trade relative strength and relative weakness. This is often overlooked by a lot of retail traders. Relative strength doesn't mean RSI. That means how is the stock that you're looking at and considering trading, how is it trading versus the S&P 500 or the triple Qs? The S&P 500 is, if the S&P, the SPY for the day is going sideways and down, and you've got a stock that's stacking green candles, you've got relative strength, and vice versa for weakness. This increases your edge by a lot, because if the market turns against you, if you've got a stock with relative strength, it's not going to fall as fast. So you mitigate any kind of losses you might take. We try to trade with the market trend if there is one. And then we buy near support and sell near resistance. This is extremely important. You don't want to chase stocks that are ripping higher or ripping lower. You want to wait for them to come to support or resistance and then go back into the original trend. And that's where Heiken Ashi comes in important. We'll go over that. But these are the 4 things that you need to have an edge. We have an edge over other retail traders. And the compass system, as it used to be called, we've added a bunch of things to it, so now it's called the SPY Super System. But it does identify the probability setups, the highest probability setups, while sidestepping the ones that are not high probability. And it does this by identifying when institutions are driving the move and when they're not. This is what we're looking for. And it does this by analyzing very complex trading data and information, but it displays it in a visual format that's very easy for traders, even new traders, to understand and see whether institutions are in the trade or they're not in the trade. So how do we get an edge over retail traders? Well, we just covered that. We only take trades that are being driven by institutions. Number 1, this is important. I don't take any that aren't being driven by institutions. Now, they don't stay in the trade all day. We could get in a trade when the institutions are in it, and then they may not be in it an hour later, but the stock is still trending in a direction, then they may come back in again. But when you get into the trade, we want the institutions to be driving. We only take stocks that have relative strength or relative weakness to the SPY, and we trade in the direction of the overall market trend, right? If you do this, these 3 things here, you're going to be ahead of about 98% of the retail traders in the world. Most retail traders have no idea what relative strength or relative weakness is. They don't have any idea if institutions are in the trade or not. They just use volume and try to make a determination just based on volume. It's not enough. And then a lot of them just ignore the overall market trend. I mean, if you get a choppy day and you're trading as if it was a trending day, you're not going to be in good shape. So you have to adjust your trades, the length of trades, the volume, the number of size of the position you take to the actual over market trend. So again, our trades will be supported by institutional buying and selling. Stocks will be outperforming the SPY, and they'll be moving in the direction of the overall market. This gives you a huge edge. Just learning those few things right there will give you an edge over most retail traders. I just brought this up. Now, this is just a quick, this is the SPY Super System on Thinkorswim. I'm not going to go into a lot of detail here. I'll show you later, but this is the information that you'll see on the chart. This is the one I have in the room all day long. I have this chart up. It also has some scanners on the side, which I put off to the side so I can make this a lot larger. But what we've got is we've got 3 indicators down here. This is a long-term trend. You can have colors of the red or yellow, blue and green. Red and yellow is short, blue and green is long. In other words, red and yellow is bearish, blue and green are bullish. Then we have multi-time frame trend. This is very important for swing trades. Multi-time frame trend, current time frame momentum, and multi-time frame momentum. You use both of these if you were trying to take a swing trade, but especially the multi-time frame momentum. If you want to go long, your multi-time frame momentum on the daily chart needs to be green or blue. And this is current time frame momentum right here. This is whatever time frame you're on. This is a 5-minute chart, so this is the current time frame on 5 minutes. You notice it went from red here selling to blue buying. This is one we use for our intraday quick trades, such as the SPY Super System trades that we take off the indexes that are just going to be used for a few candles. These are quick intraday trades. This is what we use. This is the actual oscillator that is creating the colors here and the momentum. It's a Laguerre, but we strip out the divergence in it. It's just a Laguerre with momentum. It's pure momentum. One of the best things that you can use to identify if a trade is good or bad. A few things on here as far as indicators are concerned. This is the VWAP. This is critical for 5-minute trades. Don't use it on the daily, but use it on the 5-minute. Volume weighted average price. All the institutions use this. This is where they get in and get out of trades right here on VWAP. So if the VWAP, if the stock price is below the VWAP, you should not be going long. If it's above the VWAP, you should not be going short. Then we have the 15 EMA right here. This is a 15 exponential moving average of an exponential moving average. It's a smooth 15 EMA, which takes out a lot of the chop. This is also a support resistance level that we use for our intraday trades. And this is a pivot point. I have only one pivot point I use. I found this one to be extremely effective and honed it down. We used to have 3 different pivot points in the system. I found 2 of them didn't work at all, or very little, but this one works really, really well as a support resistance level. All right, so that is the system, what it looks like here on Thinkorswim, and this is what we use to find our indicators. Okay, now before I get into Heiken, Ashi, I want to cover something here. People, I try to get traders to understand that it's important to trade off a criteria, all right, and not your P&L. So what we call the criteria is the process, going through the process that we use, and I'm going to go over the exact steps here in a minute. But learn the process before profits. Process comes before profits. You've got to be able to understand the process and use that in your trading. So learning the criteria and the strategies must come before focusing on results. And this is really, really important, because if you're trading and you're basing your decisions, or you're basing your results, how you think you're doing based on your P&L, without having a solid process to follow, it's going to end in failure. If you're just trading off your P&L, that means you're not trading off your technicals, and this ends up being a disaster, right? Because you're getting in a trade, staying in trades too long, getting out of trades too soon. You have not got the basis for how to make these trades. And that's what we call a process. So learn the criteria and the strategies first, and then look at your P&Ls later. Now this is the first time I put this up here, but this is just, it's kind of an informational thing for traders. This is meant to get people to focus on again, that's the process. This is what you do. It's called the OODA loop. It's used in a lot of businesses. It's used in the military. It's fairly simple. The 4 steps you go through is you observe, then you orient, then you decide, and then you act. And again, it was used for fighter pilots to observe the situation, orient themselves to what the situation was, decide what they needed to do, and then act on it. It speeds the whole process up, and if you go through this, it works well. So how we use it in trading is we observe. This is how we use our scans, watch lists, and news to identify prospects. So we're identifying prospects when we're observing. Then we orient. So this identifies whether the prospect meets the high probability criteria on the daily and 5-minute chart. We identify support and resistance levels. We know the next earnings date, so we're not trading into earnings. And then we check the option chain for pertinent information. Does it have weekly or monthly expirations? What's the bid-ask spread? This is how you orient yourself to determine whether that's a high probability trade to take. The next step, once you've done that, is you decide, make a decision on whether this trade qualifies as a good high probability trade setup and trade, and then act. Make the trade. Try to avoid analysis paralysis. Once you've got the conditions met and you're sure you've got your conditions met, make the trade. Okay, so that's OODA loop. And if you've not heard before, you can look it up. It's used everywhere And I use it very well in the trading. And this basically is the process I go through all the time when trades that I take. And if you think through it, you'll be following exactly the same steps. Right, so here's the basic high probability trade setup funnel that I call. This is the process, and this is what we do to orient. We're looking at the daily chart first. If you're going to take a trade that's going to be what I call a swing trade, it's going to last several hours. Not a stock that's going to, this trade that's only going to last 10 or 15 minutes, but a stock that's going to last several hours. You look at the daily chart first. Daily chart must be bullish to go long, must be bearish to go short. You don't want to be trading against the daily chart. It takes all your flexibility out of your trade. If you're in a long and the daily chart's bearish and the market turns against you or the stock turns against you, there's no way you can stay in it the rest of the day, and there's no way you can hold it overnight. So align your trades with the daily chart, and then use your 5-minute chart to find your best entry for that trade. All right, you're going to be using your VWAP, your 15 EMA, the price action, what's the market doing, but the first thing is daily, then the 5-minute chart. Then you want to trade with the trend, both the stock and the market. And this is what I call context. What's the market context? Choppy market day, like we have had a lot lately. Choppy market day, the context is not good. You don't have a trend to follow. So it's going to reduce your probability somewhat. All right. But if you've got a nice trending day, then you can stay in the trade a lot longer. You can take bigger size. Choppy day, don't take as many trades, make them smaller. And that's what I call, that's the context. What's the context of the market? The SPY super system must align. This is obviously critical. The SPY super system must be bullish for going long and bearish for going short. And you just look at your indicators and make sure that they align for that. Then you look for relative strength and relative weakness as these stops drop through here. Ones that have relative strength for long and relative weakness for shorts would be the better. If the market's weak, then you would be trying to take stocks with relative weakness. If it's strong, you'd be trying to look for stocks with relative strength. And then you want to enter near support and sell near resistance. Again, you need to identify where these support and resistance levels are. The VWAP is a good one. The 15 EMA is a good one. On your daily chart, the 200 SMA, the 200 simple moving average, the 100 and the 50. Those are your levels that you would be looking for. And this is just the funnel method written out. The two that I've got highlighted, stock to be traded should have a daily and 5-minute chart aligned, and the SPY super system indicators must align in the direction of the trade. Very important. And again, if you're doing an intraday trade, stock price should be above the VWAP for long and below the VWAP for short. Have patience. I show this all the time. Have patience. Now this in the room itself, these are the strategies that we use. I use straight calls and puts, straddles and strangles. These are non-directional trades, straddles and strangles. I've had pretty good success with straddles and strangles because when the market is non-directional, what you're trying to find is a stock that's going to move quite a bit. It's got a lot of volatility, but you don't really care which way it goes. Use straddles and strangles. I use debit spreads using weekly options expiration. This would be in lieu of a straight call or straight put to reduce the cost of it and give you less likelihood of a big loss. You would have a smaller risk on a debit spread. We do time spreads over earnings. These are non-directional trades where we're just trying to harvest the implied volatility crush that occurs when earnings come out. That means before earnings come out, the market makers increase the price of the options, the puts and calls. They increase it dramatically, and it's called volatility because they don't know which way the stock's going to go, and they don't even know how far it's going to go. So they increase puts and calls. What we do is we harvest that by using time spreads. We did them a couple times this week on a couple of really nice trades, and had some. We usually get somewhere between a 30 and 50% profit on those volatility crush type trades. And then we do what's called weekly ATM. This is only done when the market is neutral to bullish. We haven't been able to do any of these for a good long time, but we use them when the market gives us those setups because we need to have strategies that we can use in all market conditions. And then we do credit spreads to capture premium over a few weeks. And for those folks who like to trade a lot more and don't mind doing quick intraday trades, these are not scalps, but they're fairly quick. It's called SPY Super System. That's a SPY Super Systems methodology using the SPY Super System software. These are for very high probability trades to catch SPY, Qs, IWM, index moves. You can use them for the futures, you can use them for commodities, but they're very quick trades, and you don't even need your daily chart. And I can't call these out in the room. I just mentioned when they're set up, and I do take them, but I can't alert on them. They're very, very quick, but we've had great success with them. And it helps people that want to they get bored and are looking for a way to avoid boredom. It does give them some trades they can look for to set up, but you still need to stick to the criteria very closely. The alert service, fairly obvious. It's designed for day trades and short-term swing trades. We're not sending out to trades that are investments. They're designed for traders who can't watch the market all day. We send out real-time alerts on the highest probability trade setups. We haven't had a lot this month, very few alerts this month because the market doesn't allow it. And my job, I believe, as managing the room and the alerts, is to keep the trade as protected as possible, which means if I've got a really volatile market where taking swing trades is going to end up in more losses than I would want, then I'm not going to take them. So a lot of people get bored with that. They say, I want more trades. I'm just not going to put out a trade to put out a trade. The trade is going to be high probability when I send it out. It's not going to be a trade that's a 50-50 type trade, because we still have losses. Even with high probability trades, you have losses. And the highest probability trades, how we find them, obviously, institutional involvement, critical, market internals. What's the volume of the stock going up minus the volume of the stocks going down? Bullish, bearish, neutral, and then we do some additional technical analysis. So that's how we come up with these trades that we alert on. We take more trades in the room than we do on the alert service, because the room we can take much quicker trades. And if I take a trade at 10 minutes before, I can't really send it out and alert it. It's not fair to the alert members. But the alert service has been doing extremely well. Again, maintaining between an 80 and 90% win rate. All right, this is an equity curve for March 23 to June 24 on the alert service, putting 2,000 into each trade. This is kind of old now. This is a newer one, putting 2,000 to each trade. This is when I've now added in here the SPY Super System methodology trades, the ones I just told you about, the quick intraday trades. That's been added in here, and that shows you it's a pretty nice. This is just Q4 through Q1 of 2025, last 6 months. 2,000 into each trade. All right, so now we're going to talk about Heiken Ashi. All right, so it's going to take a little time to get through here. If you have any questions on these as we go through, please post them in there, because I'll try to do this as quickly as I can. But there's a lot of information to cover here. Again, you trading Heiken Ashi using a SPY Super System. All right, here we go. So let's just look at a chart. This is a pretty basic chart. Everybody knows what a candlestick chart looks like. This looks like a candlestick chart, but these are Heiken Ashi candlesticks. These are not regular candlesticks. And the big difference between Heiken Ashi candles and regular candles is they're made up of 2 candles. It takes 2 candles to create one Heiken Ashi candle. Now this is the British pound, Japanese yen, doesn't matter. The point is, these are what the candlesticks look like. Any candlesticks with flat tops, no wicks on the top, these are bearish Heiken Ashi candles. All right. Anything with flat bottoms, these are bullish Heiken Ashi candles. This is the most important thing you need to learn from this. Flat tops, bearish Heiken Ashi candles, flat bottoms, bullish Heiken Ashi candles. And when you've got flat top after flat top after flat top, this is a really good bearish Heiken Ashi trend right here. All right, you keep it. If you're in the trend, you can watch it. As long as you're still getting flat tops, you're in the bearish trend, you can stay in the trend. Right, so these are Heiken Ashi bearish candles right here. And these are pretty big. Now, as they come down, you notice you start to get little wicks and tails here. So if you were in this short, you'd be kind of watching for any kind of a reversal. And right down here, we start to get reversal. This is where you would likely get out. These are little wicks, but now you're starting to get some big wicks and some green candles. This would be your exit. Now, if you were trying to trade this stock long, what you're looking for is a Heiken Ashi reversal to the bullish side. Right, now, follow me on this. There's a couple of things here. When you go from a bearish Heiken Ashi with flat tops, and now you switch to flat bottoms, this is a bullish Heiken Ashi, and this is a Heiken Ashi reversal. But there's one thing you need to understand. When you're reversing from a downtrend to an uptrend, the candlesticks that reverse it to the upside need to be as big or bigger than the candlesticks that were creating this downtrend. So for me, you could take these and you'd probably make money on it, but I wouldn't take it because they're not big enough. These were pretty big. I'm looking for a much bigger reversal on something like this. So it comes up, you can stay long here, and then you start getting wicks and tails right away. You're gonna get out of the trade. Now we come back down again. Here's a bearish reversal to the downside right here, pretty big. And another bearish reversal. Here's a flat top, flat top. Now we're getting a reversal here. Here's your wick and tail. Here's your flat bottom candle. Look at the size of that candle. This is a Heiken Ashi reversal into the original, if there was an original bullish trend, this is where you would be taking it long, especially if it's coming through the VWAP right here, or through the 15 EMA, right here. So now you got a bullish Heiken Ashi candle. Here's another bullish Heiken Ashi candle, another bullish Heiken Ashi candle. See them stacking, one right after the other. You get a wick and a tail, but nothing, no flat top, another Heiken Ashi bullish candle, all the way up. And here's where you're gonna get out. Big wicks and tail, red candle, you're out of the trade. That's the trend, and that's how easy it is to know, to identify. Now notice one thing. Each of these candles starts in the middle of the previous candle. Okay, they always start in the middle of the previous candles because of the way they're constructed. They constructed up two candles. So these do two things for you. They start in the middle, but once you get a Heiken Ashi reversal like this, remember it's made up of two candlesticks, all right? So what you're getting in, this is built-in confirmation, is built into these Heiken Ashi candles. If you're used to trading regular candles, and you're looking for a break through compression, for example, a compression breakout, if you're losing regular candles, you usually have to wait a while to see if it's confirmed. With a Heiken Ashi candle, once you get a Heiken Ashi candle with a flat bottom through compression, that is a confirmation of the breakout. Doesn't mean it won't fail, but it means it's much less likely to fail. Okay, so those are Heiken Ashi candles. Now let's go into a little detail on these things. Again, if you haven't used these things in your technical analysis, you probably want to try doing it. They're very easy to construct. All you have to do in any platform is just click to change from standard candlesticks to Heiken Ashi candles. It means average bar in Japanese. It smooths out the price action, so identifying the trends and reversals is clearer. And it eliminates a lot of noise, which is what gets people out of trades a lot of times. With a lot of chop, they'll get forced out of trades because they get nervous. They're watching their P&L, they're watching the candlesticks. They're not just, so if you go to Heiken Ashi candles, you're not going to get pushed out of a trade too quickly. Makes it much easier to see the trends and stay in the trade throughout the trend, allowing for improved profits. Again, bullish Heiken Ashi candles have flat bottoms, remember this. And bearish Heiken Ashi candles have flat tops. This is critical, and I'm going to show you some charts with them in them. Okay? So again, bullish trends will have flat bottom Heiken Ashi candles one after another, and bearish trends will have flat top Heiken Ashi candles one after another. Okay, I'm not going to go through this whole thing. This is something I wrote a couple of years ago in Reddit for Heiken Ashi candles. Again, a reversal in a bullish trend. You have a flat bottom Heiken Ashi candle, followed by a smaller doji Heiken Ashi candle, having both wicks and tails, followed by a flat top bearish Heiken Ashi candle. That's that trend I told you about. That's how you find reversals in trends, and they're good places to enter because you're getting in at the very beginning of a reversal in the trend. Okay, it's interesting to note that when you have Heiken Ashi candles, the price that it's showing on your chart won't be the same as what the actual price is. It'll be off by a few pennies. That's just the way it's constructed, but you would just look at the actual platform to tell you what the actual price is. Okay. And I did cover this. Once you have a valid Heiken Ashi reversal, the first thing that needs to be true is the Heiken Ashi candle height has to be at least as large, preferably larger, than the prior candle that occurred prior to the reversal. Just I showed you those bearish candles, you want your bullish reversal candles to be as big. If they aren't as big, you're going to need two or three of them to confirm the reversal. Okay. And this just goes into this trade to be made on stocks with relative strength. This is basically just telling us when you're using Heiken Ashi candles, you want to still use the same criteria for finding the highest probability trade setups that we do for all of our trades. Right, so obviously we want to be using the SPY super system to make sure the institutions are in there. You want to trade relative strength, relative weakness, all of the criteria that we use. And this just kind of recaps it. You can read this when you get this, but again, it just kind of goes to the fact that it minimizes the noise, providing a clearer depiction of the trend. And yeah, it excels at identifying trends, potential reversals in classical technical patterns. Right, very, very useful. And again, here's what I just want to reiterate this. Flat bottom candles in an uptrend signal a strong visual of the current trend and strength. You can see it right here. These flat bottom candles, and if this was, for example, your VWAP in here, it's probably a Bollinger Band, but if this was a VWAP, as long as it stays above, once you get in, as long as it stays above your support level, you can stay in it. And notice how many candles you've got here that have flat bottoms on them moving up. Now, when you start to see this kind of price action at the top, you're out. This is a bearish reversal. You don't really want to be in here. You want to get out as soon as you start to get a bearish reversal. And I actually switched to regular candles once I'm determined I'm going to get out of a trade. But here's a bit bullish one. Here's a bit a bearish trend. Here's a reversal on the Heiken Ashi, but notice the candles are too small compared to this. So you wait until you get a big candle and then a breakout through resistance. All right? Yeah, I don't need to go over all of that. I think that what we've covered there is pretty much takes it. Again, you do want to examine your nearby support and resistance levels for potential gains. This is something you should always do. Look at your daily chart. Is the stock price close to the 50, the 100, or the 200-day moving average? Is it going to run into it in 10 cents or 20 cents? You don't want to be taking those trades. Again, align the trade with the current market trend for increased success. Choose a stock with relative strength, relative weakness. I do look at Bollinger bandwidths indicating breakouts, but it's not something you have to do. But I'm looking for a breakthrough throughout a compression. And after entering the trade, switch to standard candles. I don't do this right after I enter a trade. I wait until I think I'm getting close to my profit target. Then I'll switch to regular candles. Okay, so this is a recap of Heiken Ashi. Right, smooths out price action, reducing noise. This is really important. A lot of retail traders, they're watching every 5-minute candle. And you can get a lot of really crazy price action on those 5-minute candles. You get a green, and then you get a big red 5-minute candle. And then you get nervous, you bail on the trade, and the next one is green going right back up again. If you had been focused on the Heiken Ashi candle, you would not have gotten out. Okay, makes identifying trends much easier. Improves identifying confirmation of trends and trend reversals. This is the critical thing. Getting into trends at the beginning of a reversal is really, really helpful because you're getting in early, right? You don't have to wait to chase it. And again, it helps identify potential exit when the candle bodies shrink or the reversal occurs. All right, so that's Heiken Ashi. I'm going to show you a couple of charts, and I'm going to go to some live charts on Heiken Ashi candles so we can see them in action. Now, this is Uber from a good long time ago, but it doesn't really matter when it was. These are standard candlesticks, and you notice the gaps here. See this gap? Okay, this is Uber. This is my TC2000 chart that I use. I'm showing it on it because it's a little bit easier to see. And I do color code my candles for Bollinger Band compression or breaks of compression. Anything blue is a bullish break of compression. Anything pink is a bearish break of compression. But that's just what I use in my TC2000 charts. But so here's a regular Uber chart. So let's look at Uber with Heiken Ashi candles. First thing you notice, see, gaps are gone. There's no gaps on Heiken Ashi candles because it takes 2 of them to make up a candle. But notice your Heiken Ashi reversal right here. See, it's coming down, flat top, flat top, flat top, flat top. This is the 8 exponential moving average right here that I use sometimes. This is the 200-day moving average, this purple line. It bounces off the 200, but not a Heiken Ashi reversal. Then you get a Heiken Ashi reversal right through the 50 and right through the 100. That's blue line is the 50 is 100. This is the 50. See that Heiken Ashi reversal? That's where you would take the trade, right there. That's May 1st. You would take the trade on May 1st, right? Here's where you would take the trade, May 1st, right there, right? So you would have actually gotten that next big gap. And then when it starts to tail off here, they're getting smaller and smaller and smaller. This is momentum is waning. This is where you get out. You don't wait. You know, there's probably going to pull back or go sideways. You take profits right there. All right, so that's what Heiken Ashi looks like. Here's another one over here. This was a bearish Heiken Ashi reversal. What I'm going to do is I'm going to look at some charts. So I'm going to switch a couple of things. Bear with me just a minute here. Let me switch to. Right, this is the SPY super system right here. This is the whole thing. This is a daily chart on Pepsi. These are some of the scanners. We've got about 6 scanners that you can use that come with the SPY Super System. This is cascading up. This shows stocks with relative strength. This shows relative weakness. These are new yearly highs. I use all of those, but let's just move those out of the way for a minute. So this is Pepsi on the daily chart right here. Now, I took this yesterday as a short intraday, but we held it overnight. Now, this was earnings. You notice on these candlesticks, all right, if I switch, this is where you switch the candlesticks, the Heiken Ashi. These are Heiken Ashi candles right here. You see this flat top, flat top? This is the beginning of a downtrend in Pepsi, right? If I go back and look, you can see we had a downtrend here, went for a few candles, then went sideways and continued on down. All right, so that's what you look for. Here's a Heiken Ashi candle for an upside right here. There was a trend of about 4 or 5 candles. That's 4 or 5 days in there. And you notice that we took it and notice it's all red here. Long-term trend, bearish. Current time frame, multi-time frame momentum, bearish. Current time frame momentum, bearish. The institutions are selling the heck out of Pepsi. So what am I going to do? I'm going to take puts in it. All right, that's what I did. All right, so that just kind of shows you one of those. If you look at something like Eli Lilly on here, I'm going to show these on TC2000 as well. Here's Eli Lilly. You see this Heiken Ashi reversal right here, a big one. You notice how the institutions were still red here, but they went to blue right here. But they're going back and forth, red, blue, red, blue. This is a difficult situation to try to take because these are switching back and forth on a long-term trade. So I wouldn't take it because of that. But current time frame momentum is. But here's a bearish one over here. You notice it went to a Heiken Ashi reversal bearish right there. See, this went from green to yellow, and this was already red. Here's where you would take it short. The institutions are selling. They just went from buying to selling on the daily chart on the current time frame momentum. You take it here, you get flat tops, you stay in it as long as the tops stay flat. Now you can start thinking about getting out. All right, so that's how those work on here. Now I'm going to show you a few of them on TC2000. They're a little bit easier to see for me on TC2000. All right, here's Pepsi that we just showed you. All right, and these are Heiken Ashi candles right here. So if I look at standard candles, this is what it looks like. All right, breaking down. This was earnings. This is what I'm using. So this is why I took it short. Okay, you can see that there was a reason for taking that short. I'm going to look at a couple of other ones here. Right? Look at Johnson. This is a Johnson Controls, a Jacob Solution. Sorry. All right, so you can go back and look at the chart. You can see these Heiken Ashi reversals here. All right, telling you to go short. Notice it's staying below the 8. If you use your 8 exponential moving average on here as a resistance level, you could get in it here, and you would stay in it all the way down until it closed above there, which it did until right here. But notice you've got a lot of mixed candles, but a lot of Heiken Ashi bearish candles all this way down. And what did we get yesterday? We got a Heiken Ashi reversal to the upside right here. All right, so this is pretty nice. This is a pretty nice long setup. And if I switch to my regular chart, there it is right there. And on my regular chart, I notice it's gone through the 50-day moving average. It's got room up here to the 100 and the 200, about $129. So I get about $6.5, $7 potential profit on this trade. All right, just looking at Heiken Ashi. Here's Ferg, another Heiken Ashi reversal. This is the regular chart. Here's the Heiken Ashi chart right there. See the little bit of a tail on that one? Flat bottom. Heiken Ashi reversal. This is actually a Heiken Ashi continuation because we had one here. We're still kind of in a bullish trend. Notice over here how you could have shorted it here. And look at this beautiful drop on these candles right here without any bullish reversals all the way down. Pretty nice. And that's from, what, about 172 all the way down to about 154. All right, on FERG. So that's how you would use that. And if you look something that you're probably all familiar with, NVIDIA, is NVIDIA. It reversed right here in the Heiken Ashi reversal with a flat bottom. It moved up. Let's look at the regular chart. There it is right there. And the only thing that would make me a little nervous here is this 50-day moving average is getting pretty close. But that's how I use them. Now, let me look at a couple of shorts so you can see how they work on shorts. HELE. All right, here's HELE short. This is regular chart. All right, and HELE coming down. Just had earnings on 4/24. You can see it right there. All right, but let's look at the Heiken Ashi for it. See that? Wick in the tail, flat top, big candle. It's still in a big downtrend here. This is a Heiken Ashi continuation to the downside. But notice how beautiful this is. when you see these. So this is what you look for. MKC right there. Heiken Ashi reversal right there. Nice one. Kind of chopped around. We get another Heiken Ashi reversal yesterday with a good sized candle. This becomes a potential short. Right, and I switch over to the regular candlesticks to see if I've got support. I got a little bit of support down here at the bottom of that candle. All right, so that's MKC to the short. And one more, and then we'll get off of these. ODFL. This was a regular candles at ODFL, Old Dominion Freight. Right, obviously bearish. Switch to Heiken Ashi. Here's your Heiken Ashi reversal right here. But it's a very choppy stock. See all of the wicks and tails on these things. But you notice how nicely this one worked here. Okay, so those are the Heiken Ashi reversal candles on TC2000 and on Thinkorswim on the SPY Super System. All right, so I'm going to go back to the presentation. All right, so those are some live ones. Now, right here, I'm going to talk about the results that we've had in the room. Hopefully, if you have any questions on Heiken Ashi, please let me know. But I'm going to go back and go to the trade results we've had in the room. Remember what I said, you have process followed by results. Process follows by your profits. This is the results of what we get by following the process that we do every day. All right, in 2023, using $2,000 per trade, we produced a little over $60,000 in profit. Okay. In 2024, using $2,000 a trade, we produced about $55,000. And the profitability is going to always depend on what kind of a market you've got. How long can you stay in the trades? You know, how many trades can you take? Is there a trend that you can trade with, or is it choppy? That's going to make a big difference. This one I wanted to point out. This was a couple of weeks ago when we had these big moves in the market. If you're probably familiar, that when the tariffs went on, the Dow Jones Industrials dropped at 3,900 points, and then when they were taken off or paused, it went up 3,200 points. Right, just in one day, 3,200 points in one day. So during that particular period, while the SPY was down 10%, this is a huge drop in the SPY, 10% in less than a week, right? It's actually 2 days. These are the 4 trades that we had on. These are the only trades we had on during that week, and these are the trades we closed. That's all we had on. We had AVGO, this is Broadcom. We got in at 75 cents a contract, and we closed it for $1.04 for 39% profit. We had Nike, we got on 328. This we got a little bit of a break on because we paid $285 a contract, closed it for $9, $216 profit. But this was really impacted heavily by the tariffs. We had Nike before the tariffs were announced. Once the tariffs were announced, and in Vietnam was supposed to get a 35% tariff, Nike makes all their shoes in Vietnam. A tremendous drop, $9. It actually got to $11.50, but we closed out at $9. 216% profit. It's the best trade of the year, $4,300 on $2,000 invested. Pretty nice. Sarepta, we were also short Sarepta. Got in for $450, closed it at $8, 78% profit. And we had NNE, we were also short NNE, entered for $1.80, closed for $2.25, 25% profit. Those are the only trades we had on, the only trades we took during this period. And I'm really trying to point this out because it shows you how important it is to keep your trade count low when the market is really volatile and only take the very best trade setups that you can find. All right, I'm just going to run quickly through the months of 2024. Not so much to show you the profits we had. We had good profits. To kind of show you the trades we took and to what kind of percentage gains you can expect out of the trades that we take. All right, you know, there's 10% to JPM, 43% on Zim, 37% in Vertex, another 32% in Vertex. And we had some credit spreads, 25%. So mostly it's going to run between 10, 20, 30, 40%. We did have 96 here on Boeing, and we had 65 on Mara. That's a crypto stock. But we had losses. We had 2 losses. I want you to understand, we're going to have losses. You always have losses. Everybody has losses. They tell you they don't have losses, they're lying to you. All right, or if they don't trade, they won't have any losses. So that's January. Here's February, our best month last year, 24 wins and 2 losses. In the alerts, we had 20 wins and 2 losses, netted 11,745 in the room. We netted 69.30 on the alerts. But I'm more interested in, you know what our results are. You can see the annual win of about 60,000. But this is what's important. You notice how we have just such consistency with the trades that we take and the trades that money we make on them. James, have a good one. Thanks for saying. You'll get a recording of this, James. Okay, these are the May trades. All right. There's your May trades. Again, 15 and 2. It's not a lot of trades. 15 and 2 on the alerts. 29 and 7 over here. But again, you see the percentage gains. All right, so I'm just going to zip through these. Again, you can see these. Here's our wins. I'm not going to just try to highlight all the money we made. We made a lot of money every month. But some months are better than others. It just depends on what the market's giving us. There's August. This was our losing month last year. 2024. This is our only losing month. September. 8 wins, 5 losses. Horrible win rate for me. 62%. Probably the lowest I've had in 3 years. But we only lost $1,700. 8 wins and 4 losses in the alerted room. The alerts only lost $295. But it was a loss. I don't like losing money. Yeah, you'll get a recording of this webinar. Everybody will. All right, this was the October. Looked good. 17 and 3, 14 and 3 on the alerts. 82%, 85%. We see we bounced right back up from those losses. Here's November, and here's this year. January, February, March of this year. January, February, March, and April of this year. 31, 35, 38, 78, 27, 54, 17 so far in April. Fairly consistent. And if you've been trading, you know how brutal the trading has been through this particular portion. Really, really bad. And you see the number of trades we've taken have dropped quite a bit, right? But still making money on these things. And it's the win rate really consistent here, month after month. All right. Now on the alerts, when you get an alert, I just want you to see what it's going to look like. They're going to be alerted by message, SMS message. Here's one. This is what you would see on your phone. It would say 3/28. That's the date of the trade. NKE Nike buy the April 11th 67 puts for 285. That would be all you would see the first time. Then you're going to get a sell order at some point during the trade, and you may get adjustments to that sell order. Sell order for $9, and then you'll get an indication that they were sold on April 3rd for $9. Okay. And so obviously it's going to include the stock symbol, the option strike price, the expiration date, and the price to pay for the option. All right? And again, how do we achieve these kind of results? Well, we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We follow the process, right? Looking for the right criteria. So we only take trades when both of these are in our favor. The institutions are in the trade, market internals are bullish or bearish. I actually do take trades when the institutions are in the trade and the market internals are neutral. As long as the institutions are in the trade, I'll take it as long as the market internals aren't against it. Right, so that's where we get them from. And how we do it, the SPY Super System software identifies when institutions are creating a trend. That's part of the process. The trend is part of the process. And we do it through a triple screen assessment of momentum and trend. And I showed you that. All right, so here's some trades. This is this is not really a trade. This is a chart that I showed you earlier. Here's the SPY Super System software, what it looks like, right? Multi-time frame momentum, current time frame momentum, most important. VWAP is very important on a 5-minute chart, 15 EMA, right? This is all we need to trade. This is a new template. This is for folks who are doing the SPY Super System trades, which are the intraday trades, the quick trades off the SPYs, the Qs, the IWM. The only thing you really need is just the current time frame momentum. You don't need the others. So I just have a template that shows that. Yeah, if you buy the SPY Super System software, you'll get both of these. You get this template and you get this template. You can switch them back and forth depending on what you're doing here. You can see how nice this trade was right here. You notice we went from yellow to green right here. Take the trade right here, ride it up, take it for 4 or 5 candles, and you're out. All right, and this was the SPY System. This is using Heiken candles on the SPY Super System. These are Heiken reversals. See it right there? Wick and a tail, flat bottom. See the 15 EMA? You notice how it's breaking below the 15? This is where you would take it. Everything's red or yellow. It's bearish. You write it down. Okay, and it just keeps producing Heiken candles all the way down. Okay. Now the SPY Super System, I just kind of roughly covered. This This is one for folks who like to intraday trade quick trades. It's more of a scalping type thing, and they're very quick. You're only going to be in them for 2, 3, 4, 5 candles, 5 minute candles. That's it. But this is the results I've had. Now these are my results because I can't post these; they're too quick. But these are the results I've had with this in July, 2,600, 2,500 in August. Look at this, 56, 6, and 2. We didn't do a lot of regular trades in August, but I had a lot of SPY Super System trades. Some days you'll have 5 or 6 in a day if you like to trade these. So 8,200, 7,100 September, 4,800 in October. And now it's important to understand with the SPY Super System, with these methodologies, the SPY Super System methodology, it's important to understand you're only going to have one trade on at a time, and it'll be very short duration. But you've got to babysit it. It's not something unless you're doing an OCO. If you're doing a one cancels the other order, you can put a sell order in for your profit, a sell order in for take a loss. But I typically watch them, and I basically hawk them all the way until I get out because I'm watching for reversals, etc. So you're only going to be one at a time, right? So that's important. And this is good for folks who want to be a member of the room, but they can only be in there a couple hours a day, an hour in the morning, hour in the afternoon. We may not have any regular trades during that time for swing type trades, but you'll probably have several of these SPY Super System trades. So if you like to trade like that, you can do that. And trading futures or options, day trading, yes, that's exactly what it is, Ken. We're trading, this is trading. You can do it on the SPY, the Q, the IWM. You can do it on the ES, the NQ, the Russell. You can do it on any of the futures that you want to. You can actually do it on commodities. The charts will give you the information you need for that. But these are intraday trades, very quick trades. Not something I would recommend actually for traders who haven't got some experience. But they can be, if we've got criteria that really work well for these kind of trades. And I use I'll answer this question before I get it. What do I use on SPY Super System trades for expiration dates? On the SPYs, the Q, the IWM, if I take the trade before about 1 o'clock in the afternoon, I use 0 DTE. The expiration is expiring today. Once it gets past about 1 o'clock, I switch it to next day's expiration date. Not that I'm going to hold it overnight, I'm not. But I switch to next days so that if I get compression in the trade, I'm not going to have as much time decay on the next day's expiration as I do on the current days. Do I have more current data? What do you mean by that, Royce? I got it through November, December. I haven't posted the January stuff yet, but it's very. I mean, these are similar every month to what I get. It just depends. Latest is December, yes. I could go back and I haven't calculated the January, February, March yet. I'll do that for the next webinar, but I haven't had a chance to do it. But I mean, I track all this stuff, and I haven't had as many trades during this choppiness. I think this past week I had about 6 or 7 trades, and I was up money on them. I'm up money, but I think this month we're probably at around 4,500 or something like that. December, 69 trades, 15 losses. That's correct. 69 wins, 15 losses. There's quite a few losses. Again, choppiness can do this to you. If you get in as the stock price breaks above the VWAP, and then cuts right back down, you get a big red candle that flushes out again, even after a Heiken Ashi, then you're going to have to take some losses on that. So but there's a lot of trades. And it did produce 10,000. January was a little over 10,000 as well, I remember, but I can't tell you exactly the reason. You have to remember, these are my results. I can't post these, all right? I cannot post these, Royce. I call out the setups in the room, but a lot of the traders running the software themselves, they're finding these trades themselves. A lot of traders do much better than I do because I'm also working on swing trades. I'm answering questions. I'm putting charts up there that people ask me questions on. So I can't just focus on that exclusively. But this is what I've done when I traded those. But these are my results. So this is the room results that I showed you back here on the room that we did. That's everybody. That's posted trades and alerted trades. And again, if you're looking at the SPY Super System results for this is the SPY Super System. This is the intraday trades on the SPY, the Qs, the IWM. The totals for this, which was 4,800 in October, does not include this. This isn't included. These are completely separate results. These are my results. This is what I did using the SPY Super System to give you an indication of what you could do if you were following the process. but I can't post them, they're too fast. These are the ones I did post, and I send alerts out on 17 and 3, 74.48. That's October. Here's November. Nice win rate on this thing, 54 and 5, 9,300. 14 and 2 here, 88% rate, 73.93. Many fewer trades. You can see the difference in trades. It's fairly dramatic. Okay, and here's December. December was 69.15, as I mentioned. That's a lot of losses, but listen, it depends on the market. You get choppiness, you got to get in and get out. I follow the signals, and I try to follow the SPY super system trades. I don't take unless I feel like I have a trend that the SPY has produced on the 5-minute chart to follow. If I get a lot of chop up and down for the first 2 hours, I'm not going to take any trades. I'm going to wait until I have a trend to get into. Is that trading one contract, futures or options? Well, I don't. These aren't futures, right? So this is what I'm trading on. This is it's basically $2,000 per trade. So it depends on how much the options cost. If I have an option that's $1 on the SPY, for example, I'll take 20. If I have an option that's $2, I'll take 10. Right? So I'm trying to level off the amount of money that goes into the trade, not the number of contracts. Okay, yeah, and have multiple lots of $2. My own cash to take multiple same. Yeah, I mean, listen, everybody, I just use this as a baseline, the 2,000. I mean, I've got to have some sort of a baseline to compare things to. You don't have to do obviously this 2,000, and you know I'll vary mine. I'll take bigger size on a trending day and less smaller size on a choppy day. All right, but that's what I do. But I'm trying to say it to 2,000. So how many contracts do I take? You know, if I have an option that's costing me $4, you know, I can only take 5 to get 2,000. So that's not the number of options. It's the amount of volume, how much dollars you're putting into it. All right. So here's November and December. Super system trading room results, and here it was for the last quarter of 2024. Okay, pretty nice. This is a pretty nice results, and again, these are my results. Don't assume that you're going to be your results. These should be your results if you follow the room, but these are my results, and I have traders that do much better than I do and much worse than I do because they're very quick trades. Okay, do you need 25,000 either in a margin account or 25,000 or more in your you need a cash account or $25,000 or more in your trading account. If you're going to do any of this stuff, I would suggest having at least 35,000 to trade with, and you need to be good at intraday trading and reading technicals. I mean, I have a whole strategy on this. I have a video on how you do these SPY super system trades, but they've been very, very successful. All right, for me, I mean, they were very successful for me. But some days I don't take any. You know, if it's slow, and I've got other folks that are taking them and making money on them. Because a lot of people, they love to do this. I mean, this is kind of like something you can fall back on if you can't be in the room all day, or you have limited amount of time, or you just happen to like to trade this style. All right, so these are some of the trades that we took off of the SPY super system. This is the intraday trades here. This is on the SPY. This is where we took this trade. Notice all I'm looking at, right, is current time frame momentum. This is all I want to look at here. All right, so went from red selling to blue buying. Institutions are buying. The SPY right there. You see how it's breaking above the VWAP and the 15 EMA? It's got this little pink dot. The SPY super system puts this on here when you get a compression break to the upside. Okay, right there. This is the trade we took. We stayed above the 15. The 15 would be our stop. We ride it up. Could have got out here. I get out here as it starts to doji and lose momentum. I get out right here. That was $220 of profit contract on the SPY. Now, that's a pretty big profit. Most of our trades aren't going to, unless you get a trend like this, most of them are going to produce somewhere in the neighborhood of $70 to about $140 a contract profit. If it's choppy, you know, $60, $70, $80 a contract profit. On a good trend, you'll get a nice one like that. This was SPY here. This was a $90 profit as you see. You see this was a short trade. Everything is red. I take it right here as I get a pop out of the box or a breakdown of compression right after 15, and I took it off right here. Okay, and these were Heiken Ashi candles. If I switch over to that same trade on the new format, of the new layout that just shows current time frame momentum, very easy to see. right? Here's the VWAP here. Here's the 15 here. Where am I taking the trade? I actually took it here, not here. Took it here as it broke down below the 15. I get out right here as it put in basically this big tail on the candlestick. All right, and that was $90 a contract. Again, this is using the new template we showed in the first one. See the breakout here? It goes green right here. You take the trade here, and it moves right up and gets out. All right, but this is all you need for the SPY Super System, and you get both of these templates if you get the SPY Super System software. Okay. All right, another SPY Super System trade. I'm not going to beat these to death, but I want you to see them. This was an older one before I had the actual indicator down here, but you can see the breakout here. See the compression and a break above the 15. Take it here, and I rode this thing up for $130 profit. It kind of chopped around, but it never got below the 15 again. And I think I got a little antsy here when I started to get some more red candles. Okay, this was $90 on this one. We just showed this one a bit ago. This was $11.15. This was $120. See the breakdown here? Notice everything is red here. The institutions are selling the heck out of this thing. So you go short the IWM right there on that breakdown below the 15 and the VWAP. So as long as the stock stays below the 15 at this point, the stock, you can stay in the trade. As it drifts down, compresses, drifts down, compresses, you can stay in the trade. And then they get out right here as it starts to flatten out. And notice it went to blue right here. Institutions coming back in again. You don't want to be in it when that happens. All right, but then, you know, $120 a contract on that. So I just show a few more, and then I'll look at some of the regular trades that we take. This was on 823. This was a big one. This is one of the bigger ones I've had. 280 all the way down here, breaking below the VWAP. Everything red and yellow right there on the current time frame momentum. Just paces sideways, and then it breaks down and it gets to the VWAP, and I'm watching it closely because this is a support level, but it flushes through it, and then I get out right down there. Okay, another one here. Again, red selling, blue buying, right? You pick it up right there as it breaks above the VWAP. You know, if you just focus on the VWAP, the 15, and your current time frame momentum, you're going to be all set on these things. Okay. Another one here. And again, I didn't put the arrows on here because I wanted you to see this, see if you can identify it. Notice it's red and it goes to blue. Okay, buying, selling, going to buying. Institutions go from selling to buying. Here's a big green candle. Do I take it here? I do not take it here. You know why? Because it's right up against the VWAP. It hasn't broken above the VWAP. So I'm still in the trade. I'm still out of the trade. I get a doji. I break here. This is where I take it, right here. Everything's blue. I take it here, and I ride this thing up for 4 or 5 candles, and then I get out right there as it starts to go red again. Even though everything stayed green, I'm going to take my profits as soon as momentum starts to wane. Is the 15 an EMA or standard? It's an EMA, Royce. The 15 is an EMA. It's actually an EMA of an EMA. It's a smooth EMA using the 15. 15 is EMA on my major charts, the charts I have in the daily chart. I have the 8 and the 15 EMA, and I have the 50, the 100, and the 200 SMAs. And I use these because that's what institutions use. I mean, people invent all kinds of things to put on their charts. You know, if you draw enough random lines on your chart and you say, look at how well this worked, you're always going to find some lines that work for some charts. But what you're trying to do here is follow what the institutions are using because they're trading off of those. They're trading off the VWAP, they're trading off the 15, they're trading off the 50, the 100, and the 200 on the daily chart. And it's important that we do the same thing. Okay? And SPY trade is another IWM. I didn't put my arrows on here, but where would I take it? See the compression? See this break right here? As it goes green, it breaks above the VWAP, the 15 right here. This is where I would take the trade. Not a big trade. This thing ground up for a while. You'd probably get bored in this thing, but again, it was still bullish and you still made money on it. This one I just wanted to show because I traded it both ways. I took it to the short side here. Everything's red, obviously. Institutions selling the heck out of it. I take it short here. It comes down for 3 candles. I get out as it goes back to green again. Then I watch it break up here, and it breaks above the VWAP, and it goes blue. Institutions buying it. I buy it right here as it breaks above the VWAP and the 15, and I stay in it. And then I get out as it starts to flatten out right here. I'm not going to try to run it through the VWAP, through the pivot point after I've got decent profits on it. These things move fast. You have to remember the premiums on the SPY and the Qs and the IWM move up and down really, really quickly. So it's very, very volatile. This is not for new traders. I would recommend against it for a new trader. Okay, another one on the SPY, as you can see right here. Again, green, yellow is selling. Take it right there. Write it down to 15. Keep writing it out right there. All right, now I'm going to show you some charts from some of the regular trades we take. These are swing type trades. They can be intraday trades, but they can be swing trades. I want to point out one thing for folks who are under PDT or you don't have 25,000 in your account. So you're what's called a pattern day trader. You can only do 3 intraday trades in a 5-day period. So you can't do those 5 super system trades. But all the trades we take in the room and with all the alerts we set out, I'm using the daily chart as my basis, right? So if I get out intraday, if I say I get in at 10 o'clock in the morning and I get out at 3, and you can't because you're a pattern day trader, you can still stay in the trade because it was set up as a long using the daily chart. Every trade I take that's a swing trade, or can be a swing trade in the room and alerts, I'm meant to be set up as a swing trade, which means if you can't take it off, you can take it overnight, and you've got a good chance of being able to make money on it because it was a swing trade to start with. All right, so here's some of the trades. This was the Nike trade that we talked about. We had it on the 28th, right? We had it here. As it broke down, you see how it's compressing, breaks down with a big red candle. We stay in it here. Some people actually sold it here and took some money off. We stayed in it, bam, the tariffs go on. Look at this drop, this big, huge drop. This is where we got our 216%. It actually gapped down the next morning and then came right back up again. We're out on that. I have a rule or a saying that I use, gaps are gifts. If you're in a trade long and you get a gap up in the morning, take the money. If you're in a trade short and you get a gap down in the morning, take the money. Gaps are gifts. Don't get greedy and think it's just going to continue. Stocks at gap generally don't continue. More than 2 times out of 3, they will not continue. They back off some. So you take your money when the gap occurs right at the open. All right, here's Sarepta. This was another one we had short. We took this one on the 28th. You can see we took it here. It moved down beautifully. We get out right here on 4-1, actually. This is where we get out of the trade. And made good money. Again, this is the VWAP. We do not use it on the daily chart. This was HIMS. This was another one we had here. Obviously, very long. I probably should have taken it back here, but I didn't. I picked it up here. This is a daily chart. Again, ignore the VWAP. I picked it up here, and I stayed in this thing. I took 25% profit, and then I left a runner on, and the runner went up 269%. That was kind of lucky, but I posted it as 25% in our results. Right, and this was a Palantir. We took Palantir right here. Notice yellow, current time frame momentum, yellow, daily chart. This is selling, and then we go to institutions, came back in again right there. That's when we take it. Following the institutions in, and then we get out right there. Okay, Twilio, same thing. We actually took it right here from this candle, and we'll get out of this candle. Like these arrows are messed up, but again, went from it was green here. Current time frame momentum, they were buying. But the multi-time frame momentum, there was flipping back and forth. So once it goes green, then I take it. And again, 58% profit in Twilio in 2 days. Lulu, same thing here. I didn't take it on this. This is earnings. We waited for it to compress. We took it right here. Get in for $1.92 on the put side, out for $3 the next day. Okay, just one minute. Again, see, it went to blue right there. Then it went to yellow, right back to yellow. That's what we grabbed it. Amazon, this was a 5-minute chart. This was an intraday trade in Amazon. Again, see the switching back and forth, green, yellow, then it goes to green, and we break out with a pop out of the box simple. I take it right there. I didn't take it here because it was yellow. We took it here. 45 minutes we're in this trade, and we took 32%. ENPH, nice short. These are swing type trades. This was a 5-minute chart, but it was a swing type trade that I took off in an hour, but you could have held it overnight on ENPH. Verizon, again, this was 50% profit in an hour. Verizon's unusual. The options are very inexpensive. The spreads are usually 2 cents wide, so you can do pretty well if you catch one of these things, because usually it doesn't move this much. It moved a lot that day. I mean, from 33.08 down to 32.77 for Verizon is a lot. We got in for $45 a contract. We get out for $67 a contract. All right, this is Tesla. This is when we took overnight off of a reversal here, basically a pop out of the box to the downside on the daily chart right at 4 o'clock. It was showing all bearish, so we took it right there and we wrote it down. Went from we got a break on this thing. It went from 120 to 112 overnight. Nice move there. All right, so again, that's the webinar, and I hope I was giving you some information that can help you with the Heiken Ashi candles, maybe the OODA loop. Make sure you learn your process, because the process comes before profits. Very important to learn those things. I focus on them in the room every single day. The room is open from market open to market close every day. I take about an hour for lunch, but I'm in there every day with those charts sitting up there with the SPY Super System in the room, so you can see it. We keep the SPY up there, the Qs, the IWM, any stocks that anybody's interested in. They ask me, and I post a chart. We take a lot of trades that the members in the room have identified. So I'm in there all day long doing that, answering questions and showing charts to try to educate, and try to help people make some money. Again, here's what we use. I went over all these: straight calls and puts, straddles and strangles, non-directional, and you can see these in the SPY Super System. These are not posted. I don't alert on these. These are these that I take, but I have a methodology to use them that you can learn and use. Okay, so this is what the offers we've got this week. You can get a 2-week trial. Now, if you get a 2-week trial, you're going to get 2 weeks in the trading room and 2 weeks of alerts. Okay. You're also going to get my video modules. I got about 30 video modules, and I cover everything I just talked about. Straddles and strangles. I talk about the indicators on the SPY Super System and how to use them. How to do weekly ATMs. Just everything we talk about in there, I've got videos on. So that's for 2 weeks. Once the 2 weeks are up, if you want us to subscribe, you get $396 a quarter. You can cancel any time before the thing starts, but $396. But that gives you the 2-week trial. Now, if you want to get a cheaper price, then you go ahead and buy the yearly, which is $11.96. That's obviously cheaper than the $396 a quarter. But this is what you would jump right into. It's called the annual. You obviously get the text alerts. You get the trading room access. You get a private Discord community. We've got 2 professional other traders that are in a Discord room. And you get the video on the Wise Way to Trade Options Masterclass stuff, basically the training videos. Or you can do a one-time payment if you want. This would be for lifetime, $24.96 for all of this stuff forever. Okay? So these are, and you do get the SPY Super System trades when you're in this. I'll be pointing them out. So if you do this, you're going to see those. This is this actual software that we talked about, the SPY Super System software. Right? Understand, that's the actual platform that goes on Thinkorswim. You don't have to trade on Thinkorswim, but it's the Compass system with a bunch of different scanners. Rightline will actually take over your machine and put this on there for you. It'll look exactly like mine. The setup will be exactly the same. The scanners will be exactly the same. Everything will be the same. And if you buy the SPY Super System software, you get a month in the live trading room for free and a month of the alerts for free. Okay, so you get all of that when you have the software, and you'll get the videos that teach you how to use the software. Or you can do a one-time payment. This is really a pretty good deal. $14.98 a year, $19.98 forever to have that software. Then you can be in the room or not be in the room. But if you learn how to trade using the software, then you can just do it on your own. I have a lot of people that do that. All right, so those are your offers. 2-week trial, it goes to $396 per quarter, or buy it annually. You get the alerts, you get the trading room, you get the Discord, you get the videos, you get all of this for $11.96. And you've seen what the results are profit-wise. I'm not going to try to convince you otherwise. If those numbers are accurate, I try to be very transparent with that. I pointed out we had a losing month. I try to make sure everybody is aware of that. All right, and there's the SPY Super System. This is the software itself, because you have the SPY Super System software, and then the SPY Super System methodology was what uses the SPY Super System software to do intraday high intraday trades. All right, let me see if we get any other questions here. And Ken, thanks very much. I appreciate it. How many instructors at Rightline? Well, we've got myself. I have a trading room. David Kushner has a trading room using Ninja, where he basically trades futures, and he does use props account. And then we have Craig Emery, who does a futures trading room off a Ninja Trader. Those three. I try to do a lot of education. I mean, I put out videos quite often on education. I'm going to do one on that OODA loop. And I'm going to do one on the process versus the P&L, how to trade process versus P&L. But I've got about 30 or 31 videos out there right now on a lot of different things. Once you've identified a high probability trade, I go into one called how to basically find the best of the best. I got a video on that. There's a lot of videos you would have access to. How was the Rightline name come up with? You know, I don't know the answer to that, Richard. Rightline was in existence before I joined. I actually bought this software, the SPY Super System software that was called Compass. I bought that about 4.5 years ago because I was looking for a way to improve my results and find a way where I can identify when institutions in a trade. One of the things that I was concerned about when I was trading about 5 years ago was I noticed that a lot of the setups that a lot of retail traders use, MACD crossovers, using RSI, bullish engulfing candles, those kind of things, they weren't working as well. And I suspected that the institutions were writing algos to try to bust those retail traders. And I still think that's actually what's happened. Because you'll get a MACD crossover, they'll force the MACD crossover, and then they'll come in and they'll reverse it, and they trap retail traders in there. And so I wanted to know what they were really doing, whether they're in and whether they're out. And I don't use like MACD crossovers, I don't use Fibonacci, I don't use any of those things, because the institutions know all about those things. But institutions also leave a footprint when they're getting into the trade and getting out of the trade, and that's what I want to know. Okay, so that's why I did that. And I don't know where they come up with Rightline. To be honest with you, Mark Sachs was the fellow that actually did this. He had a PhD in mathematics. He came up with the calculations for finding those indicators that we talked about. Those are all mathematically based indicators, and that's how it came about. But where the name came from, I don't know. All I know is it works. All right. Now in the chat box, by the way, there'll be links to the particular these particular offers we've got: the 2-week trial, the annual and one-time payment for this room and the alert service, and also the SPY Super System software. So you'll have links to all of that stuff. Richard, I would say you like the strategy with many indicators. Do I believe an EW is a rough guide to longer cyclical trends? I don't use Elliott Wave. I know a lot of people use Elliott Wave, but again, institutions know about all these things too. I've never really found Elliott Wave work that well. Just like I used to use Fibonacci. I've gone through most of these things. I used Fibonacci for a while to try to see how it worked. The problem with Fibonacci is you've got about 6 lines on there, right? Because they've got the retracements both up and down, and everybody touts how well they work because it got to this particular level and then it reversed. But meanwhile, it went through 2 other levels to get there. So if you took the reversal off the first level, you lost money. Then you took it off the second level, you lost money. Then when you finally get to the 3rd level and it came down, then everyone says, look how good this worked. It didn't work good because you were already way down money by trying to use it initially. So I don't use Fibonacci. I don't think they work. Elliott Wave, I haven't really traded enough to know whether it works or not. But Elliott Wave is more obviously for cyclical trades, for investing type purposes, or longer term type trades. How about pivot points as support and resistance? I have that one pivot point that I showed on my chart. We have a nice pivot point, one pivot point that I found worked really, really well on the SPY Super System. And I use it all the time on the 5-minute chart. It works like like a charm most of the time. And so, yeah, I do use that pivot point. I mean, if you go out and put pivot points, you can put like 6 pivot points on a chart. But that one that I found worked really well. The other ones broke. They didn't give me as good a results as I would have hoped. That one I got on there worked really well. The other ones, they were okay, but they work maybe 50-55% of the time. That's not high enough for me to lean on. Okay, any other questions? I hope that I didn't mean to make it such a long video, but I did try to cover as much as I could. I hope the Heiken and Ashi stuff helped you. I hope the OODA, I hope you can take a look at the OODA loop. That's basically something to try to force your thought process into a box, so it gets you to go through the process you should to find these trades and take the trades. Right? Try to get away from too much gut feeling, too much wishy-washy swaying back and forth. I don't know what to do. And, if you typically don't know what to do, you shouldn't do it. So this OODA loop makes it a little bit easier to try to hone in on that. All right, thanks everybody. I appreciate it. Thanks for all the good questions today, Richard. Thank you very much. Appreciate it. And look forward to seeing some folks in the room or in the alert service next week. Again, we get in there, say hello, ask me any questions you want during the day. I try to answer all the questions as quickly as I can. If you have questions on the chart, I'll be happy to bring up the stock, show how it looks on the Swiss 5 Super System, show you how it looks on TC2000 on the 5-minute daily, tell you what I think about it. Okay, everybody, have a great weekend. Enjoy your Saturday and Sunday. We'll see everybody on Monday.